All right, we'll make a start to this session. Thanks everyone for tuning in today. As always, I'm joined by Jimmy. Good afternoon, Jimmy.
G'day all, how are we? Everyone all right?
I hope so. It's another Friday. They all come very quickly, come and go.
Yeah,
Um,
yeah, always good. It's always good, mate. It's always good. So there you go. So,
it is, isn't it? There's a lot to unpack today, I think. We've had some news coming out from the CPI news, I guess, and some volatility in the markets over the last couple of days. So looking forward to getting your thoughts on all of that.
yep.
Good afternoon, Ingrid. Nice to see you online. Um, if any of you don't know, Jimmy is a full service options advisor over with Point Capital. So we really appreciate him taking the time out of his week to come and educate us all around the market and what he's seeing in the market. So we'll get to that in a minute. A few pieces of house cleaning, I guess. As always, all of these sessions that we provide here at Volatility are general advice in nature. Do not consider your personal circumstances. You need to decide if any of this information is appropriate for you. Past returns are no indication of future returns. And please be sure, if you're new to options, make sure you understand options before you start trading. They can be highly leveraged and risky. So please make sure, jump onto these sessions. That's why we host them, to educate you all around how it all works. Use the simulated accounts on our system as well, and just get yourselves very familiar with how options work before you start trading. And as always, everyone, we love to keep these sessions as interactive as possible. So make use of Jimmy's time sitting us here today. Ask your questions. We'll try to get to anything that's relevant as we're speaking about it. Otherwise, we might have some time at the end to get to any questions around options or the market. So please feel free to type into the comments box. You should all have a comments box on the right-hand side of your screen. Okay, great. That's enough about the general housekeeping. I guess why we're all here and what's important, Jimmy, is the markets, and the Aussie market especially. We've seen quite a bit of volatility over the last couple of days after some macroeconomic news. What are you seeing?
Yeah, absolutely right as well, Blake, as well. At the moment, what we're sort of seeing is the market doesn't really know which direction to take, personally. Look, personally, the way I sort of look at the market is obviously always, keep an eye on the bond market, as we know. I keep sort of telling you guys about that as well. But we'll cover the bond market. But we keep following up. We're sort of in this sort of conflicted sort of area right now as well, because the US just keep going up as well. So we do follow the US, as you guys know. Most markets do. But obviously our market is obviously at this stage right now. They don't know which way to take, obviously, the latest CPI print that we got on Tuesday as well. So we're getting mixed signals, and you're sort of getting volatility, but you're also getting volatility during the day, which has been really surprising. So, you're getting 100-point moves, in a day as well, on both sides as well. So it's been a sort of a bit of a tougher market this week as well. Look, I'm putting it towards, I think we'll probably get a bit more clarity next week as well. We have got end of financial year as well. So I'm going to sort of base it on that as well. As you guys know, super funds and all that as well close their book end of financial year. So they tell us what they've done. Obviously, it's been a good year for all super funds as well. So they'll be up again, close to over 10% as well. So that's what we're sort of waiting for as well. So I'm thinking it's end of financial year, and then we'll sort of probably get our normal market coming back as well. That's my view at this stage.
Yeah, absolutely. There's a few key points to unpack there, Jimmy. And as I move over to the charts so we can have a closer look, as you mentioned, we had the CPI print, which was on Tuesday, I believe, or was it on Wednesday? It was on Tuesday. Yep. And from there, we've seen some big volatility in the market. Obviously, the CPI print was higher than expected. I think it was expected to come in at around 3.8%, and we cracked the 4% level.
It did. It did as well. Yeah. correct as well. So, what you got to do, guys? Sometimes, obviously, a few of us don't look. Myself, I usually go into the CPI print. So, you just want to sort of see what's sort of coming out of it as well. The one that I found really interesting as well was the electricity sort of prices as well. So obviously, anyone know what the electricity prices came in at by any chance?
Test anyone that's been paying attention.
Yeah, correct as well. Let's see if obviously. All right. So what the number came in at was around 14% increase. Okay. But this is the catch right now as well. So obviously they've done stimulus as well. So obviously they've, 2023, they announced an energy sort of relief as well for everyone else as well. It still came in at around 8%. Now, to me, we're all getting these stimulus as well, but it's not actually bringing inflation down. And that's where the interesting thing is. The other thing that's gone up, obviously, which has been pretty much across the board, and this is what I say to people, if you want to sort of know how inflation's going, always look at petrol prices. And I know for a fact, I don't know what you guys are paying in Sydney and Queensland and all that as well, or wherever state you're at. We're paying close to $2. Okay. So for me right now, from 170, 180 to $2 as well, it's gone up as well. So as you guys know, everyone uses petrol, okay, in the market as well. As you know, obviously, people bring in the stuff, everything's sort of gone up as well by around 10% as well. So that's why it sort of pushed inflation up as well. So for me at this stage as well, until that sort of shows signs of coming back off, I still think inflation will sort of stay up here as well at this stage.
Yeah. And we're just talking pre the session, Jimmy, and it feels like the market probably hasn't reacted as you would assume after the high inflation print. I guess, and I think I say this nearly every week, the big run up over this from the start of this year was because of the anticipation of rate cuts and reduced inflation. And ultimately, we haven't seen that from the policies that the RBA's, put in place over the last little while. Do you have any explanation as to why, we're still holding pretty strong up here, even though, inflation is continuing to rise?
Okay, so what's actually happening right now is also obviously based on inflation as well at the moment. So what you got to sort of take into account, which obviously determines inflation. Now, our bond market has been pushing up, right? So, we will cover the bond market as well. But the one that obviously you got to sort of keep an eye on as well is, does anyone know what you need to keep an eye on that influences inflation on a macro sort of level? Geez, everyone's asleep today, Blake, as well. Must be the school holidays coming up as well. Everyone's pre-planning personally. So
it is too. Yeah.
Yeah. All right. So what you got to keep an eye on is the Aussie dollar. Okay with that? So pretty much obviously what happens right now. So the way you got to look at it right now, the US at the moment are they're looking at, well done, Ingrid, as well. Yep. Well done. Yep. So what's actually happening right now as well. So this is where gets interesting as well. So obviously when our Aussie dollar falls, okay, inflation goes up, okay, because we import a lot of stuff, as you probably know as well. Yep. So when the Aussie dollar goes up, okay, it actually cushions off inflation a bit. Yep. So now, and this is why the market is still undecided where it wants to go, right? So pretty much the US are talking still rate cuts. And it'll show us in the bond market as well, but we'll cover that as well. But our market is telling us right now as well, the interest rates might stay on hold, or they might push up. So what actually happens is the Aussie dollar strengthens on that sort of back of news. And that's why the market is still undecided, okay, which way to take it as well. Does that make sense?
Yeah, I've got an Aussie US dollar chart here, which I will try to bring up. Running slow today.
Yeah.
Hold on, I'll do a refresh. We'll get there. Still offering me things, Jimmy.
Oh, there you
Obviously
go.
not paying enough.
buy. Yeah.
Here we go. Here's the Aussie dollar chart in US dollars.
Does that look Does that look very close to something that we've been following?
I could probably overlay the bond market,
Yeah, but
Jimmy.
you could also overlay the XJO, and you probably see what I'm talking about as well. So if you put the XJO back up.
Yeah, okay.
Pretty much similar pattern, isn't it?
It is. That's surprising.
Yeah. So pretty much, obviously, the market sort of like, obviously, so, the US are going into, they're still talking, Fed members are still talking one rate cut, okay, with that. So obviously, and maybe possibly two, okay. We're here in Australia, there's no cuts, okay. It's obviously with a higher inflation period as well. So what usually happens, as you know, if companies, countries or are cutting rates as well, usually their currency will fall. Okay with that. But when they're rising, as you can see, it strengthens as well. So away we go from there. Yep.
Yeah. While you were talking, Jimmy, I just brought up the 1 year Aussie bond yield chart.
Yep.
And obviously, we can see that it has risen since that CPI print earlier in the week. And we even touched that 4.5% level briefly yesterday.
Yep, but the market is still thinking it's still on hold. I don't think the RBA will go because obviously the bond rate would have moved by 25 basis points. Okay, the cash rate's at 4.35. The bond market's at 4.43. So that tells me as well the market is still thinking there's not going to be a rate rise here as well at this stage. Now, if that starts pushing up, you're probably going to see our market start pulling back as well. Does that make sense? But it just can't break this 450 level at this stage.
Yep. That's interesting. And like, I've just brought up the 10-year chart as well, Jimmy, and we've probably seen similar volatility.
Correct. And what you want to see also in another sort of aspect of it as well is if they're going to sort of increase rates, would you expect the 10-year bond to go up as well? Yes or no? Yeah. Okay with that. And as you can see, it hasn't moved. It's at 4.35. Yeah. Where the cash rate is. Does that make sense? So if that went to 4.5 or 4.6 and the 1 year went to 4.6, that's telling us, it's going up as well. Does that make sense, guys?
Yeah. So what you're saying, if it's kind of in between levels or around the current rate, the market's just probably speculating on short-term points at the moment, and we can't get a clear indication of what the market actually expects.
Yeah, correct. So they're expecting, obviously, rates to stay on hold for the whole year. Okay with that, and especially even going into the future 10 years as well. So when the market sort of sees that as well, if they're not expecting any rate rises, okay, the market will just continue in its upward sort of trajectory.
Yeah. No, that all makes sense. Very good. We could probably change tunes a little bit, Jimmy. Let's have a look at oil, I guess. Oil's kind of had a bit of a breakout since we spoke last, which I know that you were hoping for based on a few of your trades that you were looking at. You liking what you're seeing here?
I do as well. So as you can see, obviously, and this is where the kicker is, if oil goes up, inflation will go up as well, or inflation's not coming down as quickly as they've been saying. So oil going up as well, technically it's looking really bullish for me. Next stop might be around the $85 level. Okay with that, which is a little bit high. Yeah, that sort of, that I think it's a little bit lower as well, Blake. Just there. Yeah.
Yep.
What's that, 84.5?
Yeah, 84, that is.
Yeah, 84. So I think the next level is 84, and then obviously you might get into your 90s, and away we go. So that's where it's at. So I still think there is definitely opportunity in your oil space as well.
Yeah, I'll make a note of that, and we can probably have a look at a couple of oil plays that you've been looking at from your side.
Yep.
I guess probably not too much has happened in the gold market or the silver market, so probably not too much to talk about there.
Yeah, not much to talk about. It keeps hovering. Gold keeps hovering above 2200, as you can see. So we're sort of getting that sort of sideways movement. What's interesting is it's actually formed another lower peak at this stage, but it still hasn't broken that major support level. Go with that. So you still haven't got a lower trough. You keep sort of getting these double bottoms sort of thing as well. So for me right now, look, I'd be sort of just watching gold at this stage. I'm not in a position myself personally, so I'd prefer something that's got a bullish momentum sort of thing in it.
Yeah, yeah, absolutely. And like I guess iron ore is probably the big commodity that we do watch.
Yeah.
It probably hasn't seen any upside as of late either. And we'll have a look at it in a minute, but it's clearly reflecting on a lot of the iron ore stocks within the Aussie market too.
Yep. Well, the thing is,
Has anything changed?
It's sort of starting to form a little bit of a bottom here, maybe. But if it looks like it breaks that sort of support level, the 105 level, I think it goes lower as well, under 100 as well, as you can see, back to its sort of major support level. Yep, correct, just over there. Yep. So what you find, obviously, that's coinciding with, obviously, as I keep saying to you guys, reporting. You want to sort of start seeing a bit of strength coming into iron ore to sort of jump into some of these iron ore stocks. Personally, I like the preamp myself. As you know, I mean, we've sort of been talking about it for a while. So, myself, I've, made the move on some of them as well. Just based on, the dividend returns that we sort of keep talking about as well. But we'll wait and see what happens. But as we keep saying, just stagger in, stage it in as well. Don't do your whole, one shot at it as well. You know what I mean? And away we go from there. So see what happens.
Yep, very good. Is there any other commodities that you wanted to look at?
You can have a look at copper as well if you like, if you've got copper prices.
I do have copper. There we go.
Yep. So what you want to see, same sort of setup as well. I mean, you want to sort of see a bit of consolidation, higher peak, higher trough, and then off we go as well. So that's where it's at as well at this stage. So it's sort of approaching, your 425 levels, and obviously you want to sort of see a little bit of a consolidation here, and off it goes as well. So you might want to look at your S32s and all that as well. So they're the type of sort of stocks you want to look at. But at this stage, you're seeing, obviously everything just sort of sideways at the moment. The only thing that's breaking out for me is oil at these levels, and it's reflecting in obviously some of the oil space as well.
Yep, absolutely. And it's what we do talk about quite a bit, right, Jimmy, is to understand your stocks and how they make money, and especially the commodity space. You'll see a lot of similarities between the underlying commodity price and the price of that stock.
Yep.
So definitely important to keep an eye on.
Yeah, keep an eye on all the sort of commodity space. The other one, obviously, to keep an eye on, obviously, your coal prices and all that as well. I know we probably haven't got the charts as well, but just keep an eye on the whole sort of commodity space as well. I think there's some sort of obviously some potential bargains out there as well. You know what I mean? I'm keeping an eye on myself, Whitehaven Coal and all the other sort of coal stocks as well. So there might be sort of some opportunities there. Just the whole sort of commodity space as well. So I just go through pretty much obviously what I say to you guys every week as well. Look at the dividend returns, and away we go from there. So that's what's up.
Yeah, we're kind of getting into that important part of dividends at the moment, Jimmy, which is that 45 to 50 days out from the payment to capture the franking credits.
Yep.
Do you know when that period is for some of the bigger stocks that you follow?
It starts next week, actually, some of them. So because some of them pay a dividend in mid-August, okay? Your bigger ones, your commodity space with BHP, Fortescue and all that pay closer to end of August, September. So that's, we're 60 days sort of beforehand right there. And, like your major ones, obviously, I think WDS is reporting on the 26th or 27th, somewhere there as well. So of August as well. Santos is similar as well. BHP's up there as well. So that's where it's at. So you probably just want to sort of keep an eye on calendars, marketing your diaries, and away we go. But I know CBA is reporting, I think 10th or 12th of August, somewhere there. Don't quote me on it as well. I haven't got my diary in front of me. So away we go. So, and they're the pretty much obviously as well. So go from there.
Yeah, sure. No, so a pretty important time for a lot of these stocks because, as you mentioned, a lot of people trying to capture these franking credits will have to be in the stocks over the next couple of weeks, depending on which stock specifically. So we might see a bit of volume being traded over that period of time. Great. All right. Probably good time to jump in onto the platform and have a look at a few stocks. Jimmy, I thought we might have a look at Fortescue to start, just because we spoke about it a fair bit last week, and it's probably continued its downtrend a little bit, if anything, recently. Look, it's kind of halted its price over the last couple of days sitting here. Does this give you any more confidence that we might be at a support level?
Look, it doesn't give me full confidence, but what I like about it, obviously, and as I keep saying, is the dividend return clicked over 10% at one stage. So for me, that usually when I see stocks like that, now I'm expecting them to cut a bit of their div, okay? But even if they give me an 8% return, that's still pretty good in this sort of environment, as you probably gathered. So for me right now, personally, I've come in and bought some, a spread sort of trade, as you probably gathered. So let's see, obviously depends on, your sort of trading sort of styles as well. I think we've spoken about it a few times as well. I've sort of positioned myself out to probably September. Okay. And, that's, I'm sort of thinking there might be a bounce eventually. Ideally, what I want to see is iron ore sort of consolidate and push up as well, and then go for it as well. That sort of give me more confidence to add to my position at this stage. So what I usually do myself personally, instead of, putting, 100% of my, cash to work, I'll probably start with around 30 to start off with, and then I'll go sort of a little bit bigger as well at this stage.
Yeah, no, a lot of good points there. And for anyone that is interested in more of that strategy, I'd definitely recommend watching last week's session, because we spent a good 15 minutes on potential ways to structure a trade to get into a stock that might be falling like this and to take advantage of dividends. I know you briefly spoke about, averaging in over time and using a percentage of your capital, or like a bull call spread, and looking to use your bought calls for assignment to get access to the stock as well. Correct. So a couple of different strategies to take advantage of a stock that is falling and on the cheap, and to avoid trying to catch a falling knife with using and supplementing some options as well. So I definitely recommend anyone to watch last week's session.
Yep, correct as well. So that's the thing. Oh, look, ideally, if it gets to $20, for me, it's a definite buy. I'll probably accumulate a bit more. I still won't put 100% until I see, obviously it's come back. But it's getting to those sort of levels right now as well that I'm sort of, pretty comfortable at this stage.
Yep, cool. All right, we'll move off FMG. Is there any stocks that are high on your watch list at the moment, Jimmy?
Look, as I said as well, bring up Whitehaven Coal if you want as well.
Yep.
And this is what I'm saying. You got to sort of keep an eye on this sort of coal space, sort of hitting that sort of support level. It peaked out around ninth, up there as well. So, but look, all indications is the report's okay. Coal price have been sort of recovering as well. I want to see if sort of holds and sort of starts pushing back up as well. So that's one to keep an eye on. Your S32s is another one as well to have a look at.
Yep.
Cover that. So you want to sort of see, as you can see, it's reflecting on copper prices as well, but sort of holding sort of level as well. What you want to sort of start seeing is if it sort of starts pushing up and heads up to around $4 as well. So they're the ones to sort of keep an eye on as well for myself. The commodity space, as you keep saying, we will cover WDS and all that as well a bit later on. But, the other ones obviously that, you want to sort of keep an eye on, and this probably might surprise a few as well, is your building space as well. Your James Hardys and all that, they're coming into reports as well. So they're good for sort of playing around on reporting. Yeah. And the thing is, obviously, they went up, surprise, they've pulled back to sort of these sort of support levels. And to me, they're sort of starting to look like, they're starting to form high peaks, high troughs. If you think the bottom's in, do the bull call spread, but just be mindful of you might need to buy some protection as well just before it's report as well. So that's where it's at. So they're the space that might sort of surprise. Reason being is what are they expecting? What I mean by that is, are they expecting rate cuts to come in? Are they expecting rates to stay on hold? Has they're building sort of supplies and all that are actually, come back as well. You know what I mean? So their costs have actually come down as well. So, that was sort of surprise. And if the market sort of thinks that, their future earnings are looking good, they might sort of push it up as well at this stage.
Yep. How far out are you thinking about positioning yourself for earnings, Jimmy? I think we're probably 6 weeks or thereabout for most stocks.
Yeah.
Do you try and
I'm looking at, look, for right now, I wouldn't, even August is sort of on the close sort of side as well. I'm looking at when it reports, and if they pay div, I'd be looking at around the September sort of mark as well at these levels.
Yeah. So when you're putting your spread trade on or whatever options trade you're doing, you're thinking about taking advantage of the earnings and some further time past post earnings as well.
Yeah, so now I'm playing earnings sort of season as well, so I'd be sort of holding on as well. Look, if it moves quicker than that, that's fine. You know what I mean? The market sort of usually knows. But, if you want to go through the sort of process on James Hardie right now, you can have a look as well, volatilities and spreads as well.
Yeah, well, let's have a look at James Hardie. I don't think it's a stock that we have covered. If not, it has been some time. So, obviously, first of all, we'll have a look at the volatility, which we can find on the stock overview page under the volatility tab. It's got some volatility, Jimmy, to say the least, as we can see by the chart here, and it is starting to climb, which probably indicates that people are expecting the news flow to come out soon.
Yep.
You can probably see that previous earnings seasons, it's traded up from anywhere from maybe 33, 34%, higher up at 43%.
Correct.
Currently, it's trading at about 33%.
Yep.
And a pretty high IV rank as well. So I would say that the premiums on the options are going to have or going to be pretty elevated at the moment. Great. So I'll just bring up the chart again quickly. When you're thinking about earnings, do you have a view on which way, or do you take a directional view?
Look, you can take a directional view at this stage as well. The problem that you got is in earnings season, you got to sort of cover yourself. Okay. So what you got to do is, let's say you take a bullish view. Okay. What you got to do, you got to cover yourself with a bear put spread. Does that make sense? So at least if it tanks, you get your money back. I cannot stress that enough as well, because a lot of people take the view they just buy calls or they do a bull call spread, and then it tanks by 10%, where they could have just covered themselves and, obviously got their money back as well. So if I'm looking at anything as well, if I take a view, I might take a bullish view here or a bearish view. Doesn't matter which way. But, the thing is right now, volatility is creeping up. So just buying a call and a put probably won't make sense at this stage. Do you agree with that, Blake?
Yeah, it's going to be really expensive if you're just buying calls and puts, and that will mean that your break even is going to be further away from the current price. So you're going to need a bigger movement in the underlying stock to see some value.
Correct. So what you want to do is obviously look at selling some into it as well, or obviously if you want to take the view on it that it probably pushes up, you might want to look at a bull call spread. A call. With a protected put spread underneath it. There's a lot of ways you can do it as well, but I just wouldn't just be doing straight calls and puts in this sort of environment as well at this stage, especially with high vols. Okay.
Do you just want to run through a scenario or an example, Jimmy? Say that, we think James Hardie is bullish up until reporting season. It's going to follow some of the other building stocks like, I don't know, Goodman Group or something.
So what you do first as well, guys, just obviously just the base as well. Where's support on the stock? Yeah, just there. Yep.
46.
46. Okay with that. So obviously, well done, Ingrid, as well. So pretty much obviously 46. So what you want to do is, let's say we take a bullish view on the stock. Okay with that. So what we need to do is obviously protect it from 46 and under if you want. So let's say you buy a spread, 46 and sell 44s or something. Let's just look at the numbers. And then obviously what you want to do, guys, is you want to cover yourself as well. So if it breaks that sort of support level, it could potentially go all the way down to around 40 maybe?
Yeah, 42
Yeah,
around here.
42, and the lower support is around $40, correct? Yeah.
Yep.
Yeah. I go with that. So you want to sort of look at a spread if you're going to take the bullish view. The other way is obviously, you do a bull call spread and a bear put spread, and hopefully the numbers suffice, and away we go, you make money on the trade. So, obviously depends on if you don't want to take the view, but if you want to take the view, let's say we're going bullish, but we need to have a bear put spread just in case.
Yeah. So you're saying to do a bull call spread and a bear put spread?
Correct. Yes.
Yep. Okay, I'll jump into the options chain and we'll go out to September, I guess, which would probably make sense to cover earnings season.
Yep.
And we've got support at 46, Jimmy.
Yeah.
I'll just get some more options there. We'll start off with the bull call, I guess, and we probably didn't have a look at kind of resistance lines. But I'll just put it in place, and then we can probably have a closer look at something. So I'll just bring up the chart again, and we'll start. I guess we'll start off with the bull call and have a look at kind of what levels that we'll be looking at. We've got a pretty big gap between these previous highs at 50 all the way up until kind of 53, 54.
Yep. So the base, what I'd be going a little bit out of the money on the trade personally. So I'd be looking at, maybe a 49 or a $50 call, selling at 53, 54 maybe. And then obviously buying the protection at 46 and, 43 or something. Do you understand? Something like that as well. So let's see if that works personally. But that's where I'd be sort of position the trade.
Yep. Oh, you threw a lot of numbers at me, Jimmy. I've forgotten already.
Sorry, mate.
No, that's okay.
So you want to break that sort of resistance level. Yeah, correct. Yep.
Yeah. So I do the $50 call.
Yep.
We will get there.
Yeah.
And then I'll remove these. I'll do one at a time, just so it's clear for everyone. I know I'm pressing a lot of buttons at the moment, but we will get there. I will just scale it up this way. Obviously, you can change it on the options chain itself as well. There we go. So the bull call kind of prices up at $1.18.
Yep.
For a $4 spread.
Yep, pretty good. Yep. And then what about the puts?
Yeah, I'll just jump onto the options chain. And the puts, we were looking to buy at that support at 46 and sell kind of at the 43 level.
Yeah, somewhere there. Yeah.
So between both of those, it's pricing up at about 60 cents. So total is just going to be over $2.
Yep, go with that. So, look, obviously, you can play around with it as well. Personally, what I like myself is I don't like to have that a massive gap in between the two bought legs as well. So you can play around with it as well. So bring one leg back in and away we go, right? So, instead of buying the 50, you might want to bring the 49 call, and bring the 47, I'm expecting movement because volatility does move, as you can see. So you can play around with it as well, but obviously, as you can see, you don't want that sort of big gap, but, a $2 for a $4, trade is actually pretty good as well. And James Hardy does move on report as well. So there's been instances where it's moved 10% on a daily, after its report, both ways as well. It's moved by 4-5% as well. So that's what it's at. And as you can see, the payoff diagram, it's more slightly bullish sort of, taken. But, if it does fall, you will cover your trade as well at this stage.
Yeah, no, that's interesting to put a trade on like this. It's kind of is, you're expecting a fair bit of movement in the stock over the next period of time, and you would kind of expect so with the implied volatility a little bit higher and coming into reporting season as well. And, you're kind of, making money both ways if we do see a big swing. But you can obviously, as you said, Jimmy, play around with the strikes and change your upside level and your downside level and kind of use this as a structure to base around, getting a profitable trade and protecting your downside if you get it completely wrong too.
Yeah, exactly right as well. The aim of the game, obviously, as you can see, is obviously, the closer the gap is, okay, the better is the trade, on a report, and away we go. Ideally, the best trades that I like personally is the ones that you've got the same level, the bought legs as well. So, obviously, if we're trading this one, 48 will be the ideal spot as well. But if I did 48, you'll probably see it's a bit on the expensive side, and away we go from there. But you can sort of play around with it as well, as you can sort of see.
Okay. Yeah, and you can probably structure it up to, maybe potentially not have a directional view and make money if we do see a big swing either way.
Yeah, so look, obviously, and this is what you do as well. And the thing is, a lot of people say to me, how do you know which ones, move on report? Look, that's the problem is you don't as well. But what you do, guys, you just go back in past history and look how the stock moves around that sort of reporting sort of season as well. Now, if it's only moved once in 5 years, it's not gonna move. And what you find is a lot of the bigger companies don't move as much as well in reporting. So you've got to look for obviously the ones that do move as well. So there is sort of obviously, a few sort of tricks to this one. But obviously I know in the past, James Hardy, I've traded myself personally as well. It has moved over the last couple of years.
Cool. Yeah. And in this example, obviously we're kind of, still that 6 to 8 weeks out from reporting. Is this the time where you'd think about placing a reporting trade, or would you wait a little bit closer?
Well, as you can see as well, what's happening right now, Blake, on volatility?
Volatility is increasing pretty quickly.
And what do you think is going to happen closer to reporting?
You'd assume that it'd continue to increase.
Okay. Did you get your answer?
I've answered myself.
Yeah, you answered yourself.
No. Good point. So you kind of need to weigh up the current levels of volatility and where you could expect it to go, and position yourself in a way to not pay too much for these options.
Well, that's that. As we keep saying as well, volatility is the name of the game, and if you can get into low vols and then it comes into high vols, you get paid pretty handsomely, as you probably gathered. And that's where the trick is right now. And that's why we're sort of looking, and this is what I keep saying to you guys, look, 50 days beforehand they report, because obviously if they're going to be, if there's movement in the stock, you've got to definitely jump into these as well. Yep. A lot of people, and I've seen a lot of people over the time that, have shown me reporting trades, they jump in that sort of last week. But last week, as you know, the volatility is sky high. So to make profit, it just doesn't work as well. And so that's where it's at this stage.
Yeah, and as we said, the higher the implied volatility, the higher the break-even levels are going to be.
Yeah,
so
correct. So the trick is, as Blake sort of saying, so low vols. Try and get into those low vols and look at the history of the stock. When does it move? Does it move into report? We saw that volatility goes from 25% up to 45. Do you know what I mean? And you can sort of pick what's going to happen as well, which stocks are going to move. Now, is it going to move, 100% of the time? No. If I knew it was going to move, I could tell you, no one can do that as well. But obviously, we're just looking at past histories, okay, and see what it does as well. And that's the trick to obviously trading, reporting.
Yeah. And you definitely consider which stocks you are trading, right? Yeah. And, if James Hardy only put an update to their guidance out a month or so ago, you probably not expect too much volatility or too much of a surprise come earnings season too. So probably think about, the other news that has come out. But it feels like there's a lot of uncertainty in this market, Jimmy. So it's probably worth considering placing some trades like this for some select stocks just
Definitely.
because of,
Yeah.
the
This
changes
is
in
where you
debt
start
rates.
looking, right? Yeah, this is where you start looking, you know what I mean, for trades like that as well. Moving stocks as well, you know what I mean. You'll find another sort of, one that moves in sort of these sort of reporting is your insurance sort of plays as well. Usually if there's sort of natural disasters around that have sort of, affected earnings and all that as well, you probably see movement either way, you know what I mean? Because if they're sort of expecting, better news next year, or the guidance is better, it does move as well. QBE over the last sort of 5 years has moved over 5% on report as well. ING and all that as well have done the same as well. So you've got all these sort of stocks as well. You just got to look at the history and patterns as well. And just the trick is obviously, as I keep saying, volatility, and that's what we're here as well. We've been trading with volatility for years. We've learned volatility is the number one game in options. This is where you use it to your advantage.
Yeah, no, very good point. And do you have a list or a watch list of stocks that you like to stick towards for trading earnings, Jimmy, or do you
Yeah,
stick with this? Yeah,
I do as well. I just sort of obviously what I do myself is I just look at the space. Obviously, right now, I think I think building space, and this is why I've sort of guide you guys to. I think the building space might move. You might sort of get. I think the insurance space this year there hasn't been that many natural disasters. I think so that might sort of not be the play. The other space that I'd be looking at is probably your retails space. Um, I think we looked at JB Hi-Fi last week as well, but I think, the other ones, your Harvey Normans, even your Woolies as well, I mean, that sort of space, your Coles, if they sort of surprise on the upside or they're expecting, earnings to be a bit lower, next year as well, because obviously, people, the cost of living's gone up as well. That's what you sort of want to look at as well. And that's how you sort of base yourself at this stage.
yep, no, very good. And I'm sure we'll speak about this a little bit more often, and as we approach earnings season as well, because
Yep.
as we know, we that we make money from the markets because of the volatility in the
Well,
markets.
correct. That's it as well. But what I'm sort of trying to say to you guys right now, start looking now. Do you know what I mean? So obviously, start looking. Do your preparation now. Reason why I say that as well is because right now you're sort of getting their sort of low sort of vol sort of environment, and it does increase slowly. As you can see, James Hardy increases. Another example. If we go look at Fortescue.
Yep. Or did you want to look at the volatility chart?
Yeah, correct. Just the volatility. Just
Yep.
not the chart. Yeah. I've seen the chart too many times, Blake. So there you go.
We'll get there. Hold on. Yeah, it's starting to climb.
Yep. But as you can see, it sort of, gets up there as well. Do you know what I mean? Volatility increases on the report. Look at prior what it done as well. Got up around the,
That's 37.5%
close to
from the
40%.
February earnings. And then this time last year, it nearly got to 40% pre-earnings.
Correct. And right now it's running at around 20, what is it, 24 or 25? What is it?
It's just crept up. It's actually 31 at the
31,
moment.
yeah.
But
maybe we'll look at last week as well. And this is what I'm saying. Like, you got to start looking at these because they're sort of creeping up. But understand, even at 30%, the high vol is around 40. That's nearly, obviously it's 9%, which is obviously close to around 30%. It will increase. And that's a massive move.
yeah, and you really wouldn't expect implied volatility to come down leading up into earnings. As you can see, it keeps going up.
Correct.
The closer we are.
Yeah, and what I'm trying to say here, guys, you sort of know where it sort of when it's starting to move. That's your opportunity to start looking at it. You understand? It's starting to go up now, and as you can see, what it did in the past history, it went slow, went low, and then all of a sudden it moved up, right, and got up to 40%. So, same sort of scenario. Yeah.
Yeah, it's funny how it kind of creeps up and then earnings hits and then it downtrends.
Yep.
And then earnings is upcoming and then it uptrends again.
Uptrends, and it's doing the same sort of pattern as well. And this is what I'm trying to say. And it does move. It's gone from 25. I think we looked at it last week. It was around 25. Is that right, Blake? Yep.
Yeah. Yep.
Yep. So it's already moved 20% in theory. Yep. And that's as you can see, 20% is a big movement as well in options, especially volatility.
Yeah, absolutely. You'll definitely see the options on FMG a lot higher price than what they were just a
Yep.
couple of weeks ago.
Yep. Correct.
Yeah. All right, Jimmy, let's keep moving. We won't forget about oil. What's the top oil stock that you're watching?
WDS.
Thought you were going to say that.
It's either Santos or WDS, but anyway.
We've had a bit of movement since we spoke about it last, and it's probably, hit this short-term resistance level that we were talking about
Correct.
in previous weeks.
Yep. Yep. So what I want to say here, guys, is obviously if it does pull back, I just wanted to sort of hold that sort of that resistance level there, just there, Blake, which is around 27 and a
28.
half, is it? Somewhere there, 27.30.
Yep.
Yep. Yep. So if I do get a pullback, as I want to sort of see a hold that sort of level, form a higher trough, okay, and away we go with it as well. Yep. I have a butterfly and below current price for pullback. Yeah, interesting, Brad. I've actually taken a synthetic on it myself, okay, to accumulate stock as well. So I sold at the lower end. Look, you can do it whichever way. The issue that I got with your butterfly is obviously you're expecting a pullback, but at this stage as well, with oil breaking out, it's looking a bit more bullish right now. But look, it's at resistance, so you might as well wait, see if it pulls back. So if it pulls back, obviously you'll do pretty well out of the trade.
Yep. No, very good. And as we've been speaking about, Jimmy's Woodside's kind of lagged behind recently against the oil price. Why are you kind of trying to play this into the dividend period as well?
Yeah, correct as well. So the dividend clicked over 8% for me. So for me, when I see those type of numbers as well, am I expecting them to bring it back a bit? Yes. Okay. The other one, obviously, I do think obviously they're close to obviously getting a couple of their mines in production as well, not spending money as well. So if they come out with anything positive as well, you might sort of see the upside as well. So, but I'm okay, picking up the stock at a lower level as well. So yeah, so where I've positioned myself on the puts, as you can probably gather, is at support level. So if I have to pick up the stock, I'll just take it on at this stage.
Yep. And you use the premium you got from selling the puts to buy the calls.
Yeah, correct as well. Yeah.
Yeah, cool. Yeah, Brad just said it's a broken wing butterfly, so upside is covered.
Awesome. Yeah, and that's it as well. Awesome as well. That's as you can sort of see in this sort of thing, environment, you've got to cover both sides. And that's great to hear as well, Brad. Very, very great to hear that as well, personally.
I like to trade a broken wing butterfly from time to time as well, Brad. I didn't jump in on this one, but it's an interesting way to kind of catch a stock that's trading sideways and protect yourself from one direction as well if you've got some sort of a view there as well. So yeah, good thinking. All right, we'll keep on moving. Jimmy, is there any other stocks you wanted to?
As I said as well earlier on, you probably want to look at your Coles, your Woolies as well, same sort of scenario. So let's have a look at let's look at Woolies or Coles.
Yep.
Let's go to Coles. We haven't seen Coles. We haven't looked at Coles for a while, I think. So.
Yep.
Okay. So yeah, what you want to look at, obviously, look, it's doing okay. Like obviously the numbers are looking all right as well from Coles, but is volatility creeping in? Is there any sort of nasty surprises going to come out? Cost of living bites, this and that as well. So you might sort of want to look at, the volatility on the stock as well, and play for a report.
Yeah, I think we spoke about Coles from their reporting season in February, yep. Jimmy, a couple of months ago.
We did, and it did move for around 5-6% on the day, personally. But anyway,
yeah. Maybe I can find that on the chart. Probably February, middle of February. It would have been around this time.
Yep.
I would say, and I think you structured it similar to what we looked at with the previous stock that we were looking at. Kind of like a butterfly type situation as well. Yep, very good. All right, I'll have a look at the implied volatility of Coles.
Yep.
And we'll see how it is trending. Surprisingly, it's trending lower.
Yep.
We so probably haven't priced in the anticipation of earnings over the next 6 weeks or so. So might be an interesting time to position yourself.
I think it reports around late August as well, so that's where it's at. So you just want to don't claim on that one as well. But obviously, that's where it's at. But these are the sort of tricks right now. If you're expecting again movement as well, you play. You definitely play both sides as well. But as you can see, low vols gives you a good opportunity if you want to play as well. Next sort of couple, a week or two, you'll probably want to look at it as well.
Yeah, well, we can see its implied volatility history, and it really didn't start increasing its implied volatility from its last earnings about 6 weeks out.
Correct.
Before the earnings date. And we saw how aggressive the implied volatility crept up. So you could probably assume that we'd kind of get some sort of similar movement as we move into to their reporting season as well.
Yeah. So for me right now, look, do I think the food space is going to move as much as probably some of the other retailers? I think probably your stocks like your Harvey Normans and all that will probably move more because they're really sensitive to cost of living. So for me right now, I'd probably be looking at Harvey Normans and all the other sort of stuff. Personally, for big movements, if you want to bring up Harvey Norman as well, or other sort of stocks as well.
Yep. This is the Harvey Norman chart.
Yep. So you just want to bring up, look, it's looking obviously bearish, right? But you still want to cover both sides. But just look at the volatility. That's all I'm sort of bringing up as well at this stage.
Yep.
Okay. And as you can see, it's starting to creep up. Well, it's done a massive move already.
Well, only earlier in the week it was 20% implied volatility, and it's currently sitting at 24.5. So it's moved 20% already.
Yeah, correct as well. And that's the thing as well. Historically, it's up there as well. So it gets up there as well. So, and I think these are the spaces that might sort of get affected because if they come out with anything, as you know, the market doesn't really care about, obviously their current earnings because everyone sort of knows roundabout. What the market wants to hear is their future stuff as well. So if they sort of come in and downgrade their earnings, and that's where they sort of get punished. Or if they upgrade their earnings, that's what happens. Or like a lot of the building space last year, what they did is they upgraded their earnings. So that's why you had movement in James Hardie went from around, 25 up to 40. Goodman Group and all the other sort of stocks as well just moved up as well substantially. And that's what you sort of want to see. And that's why you sort of want to look at your current environment and sort of get a sort of feeling of what's happening as well at this stage.
Yeah. And I was just remembering back to when we were looking at earnings season earlier in the year, Jimmy, and Coles specifically, I believe we were talking about how Woolworths reported their earnings and it was, below expectations, and we saw a similar price movement with Coles even before their earnings were reported. So when you're looking at placing a trade for any of these stocks you expect to have some volatility in them, do you consider the other stocks within that same industry? Does that play a part on, what stocks you're actually trading?
It does, but it doesn't really look. The problem that you got, like Woolies, earnings were lower, but Coles earnings were a bit higher. So obviously, someone's taking market share off each other. You know what I mean? So that's where you sort of obviously got to look at. For me right now, in this sort of environment, I'm looking at obviously volatility. That's the number one game. And the other thing is, as I keep saying to you guys, you've got to protect both sides. You know what I mean? So in theory, I know that, if it goes either way, I'm going to make money. Yep. And that's why I'm doing it as well. You know what I mean? But you are right as well. You look at the whole sort of sector, what it's done. Usually you get an indication, I don't want to keep saying as well, that the banks right now, okay with that, when ANZ reported well, NAB reported well, and, Westpac reported well. So they all reported well. So you sort of had a precursor what's going to happen next as well. But sometimes in this sort of space as well, usually like your JB Hi-Fi will be taking market share off Harvey Norman. You know what I mean? And away we go. So you can't really sort of predict that sort of what's going to happen there as well. Yep. And same thing happens with Woolworths and Coles. They usually take market share off each other and away we go from there. So that's where it's at.
Yeah, cool. So definitely something to consider.
You do, yeah, you do. But for me, look, it's easier. I just look at the volatility and do I get movement in the stock? You understand? And I think your Harvey Normans, if they come out and sort of say it's going to be another tough year, I reckon it'll get punished. And that's where it's at. Yeah. Because I know these sort of spaces, a lot of people haven't got free money to sort of throw around and go into, buying everything. And that's where it's at, where food is a necessity. So you've got to sort of break it up. What do I think? Which one's going to move more as well at this stage?
Yeah. No, very good. No, I'd be very interested to get your analysis closer towards earnings season, Jimmy, and some of the trades that you'll be pricing up, I'm sure, over the next 3 to 4 weeks.
Well, I've started already, guys. So obviously, if that's a hint, start looking at obviously, and this is probably your homework as well, guys. Go have a look at obviously which one's moved in the past and start positioning yourself for it.
Yep. Very good. I don't think we probably have time to look at anything else, so I'll finish off the session a little bit earlier today. I think not too much. Wow. I think by the time that I finish up, we'll be on time. But thanks so much again, Jimmy, for taking the time out of your week to educate us all, get some great insights from yourself and from anyone that is watching that would like to work with Jimmy, or at least have a conversation around putting a trading plan together and thinking about building wealth over the long term using stocks and options. Let me know, and I will send your details over, and you can have a bit more of a deep dive and a personalized chat. But that's it from me. Enjoy your weekends, everyone. And you too, Jimmy. Thanks for jumping online, and we'll speak again very soon. Thanks.
Take care, guys. See you.
Cheers. Bye.